looking like we will. We just moved down in a sizable way in terms of stock prices, crypto prices, pretty much everything except the dollar. The dollar is the one thing that's moving up right now, and it's because of the CPI inflation report. Now, there are a bunch of things that we're going to talk about in this stream today. We're going to talk about the CPI inflation, some moves in some certain stocks like CFVI and DWAC, as well as the controversy between Meet Kevin and financial education Jeremy, because that is somewhat relevant to the current investing environment. They have a bunch of things to say, and they are butting heads about which direction they think the market will turn, and I'll be giving my thoughts on that as well. So let's start off taking a look at the charts. It's crazy stuff, right? We just started moving down massively as soon as 8:30 struck and the CPI inflation data was released. So we're down, let's see how much on the S&P off of this move already, and we haven't actually started morning trading. We're down about 1% today already, just off of that CPI inflation data coming out. And it wasn't the craziest reading in the world. It wasn't good, but it wasn't the most insane reading that we could have gotten. So we'll take a look at this. Good morning, Rocky Mountain Gobblers, Zach Taylor, Heckler Coke, Tyler, Rich M, Kitchener Leslie, Albert, Manny C. Good morning, guys. Welcome. And Zach says if we're going to spend another day talking about Kevin, I'm out. We're not spending too much time talking about Kevin, but we'll spend some time touching on not just Kevin, but financial education Jeremy. So inflation rises 7.5% over the past year, even more than expected, and the highest since 1982. So all in all, not great, right? The highest since 1982 certainly doesn't sound good. We did beat out the expectations, right? The Dow Jones estimates were for 7.2% increase in inflation. We got 7.5%. Not ideal stuff. So if we're taking a look at the charts right here, you can see that inflation has been on the rise, and it is continuing to rise, and actually by quite a bit, right? So this month increased the year-over-year inflation by 0.5%. So scary to see that prices are continuing to rise, but I'm sure you guys have all felt it when you've been to the pumps, when you've been to the stores. I have certainly noticed myself, just going shopping, stuff is costing quite a bit more. So I'm sure everybody else has as well, and it's not an ideal situation, and we are definitely feeling some of the negative impacts of all of the money printing, all of the stimulus that happened last year, right? That stimulus was basically like taking out debt on a credit card, right? You have a bunch of extra money right when you do it, but then later on, you end up having to pay back that debt with interest. It's kind of like the same thing with inflation. You end up having to pay more for stuff later because you had a bunch of spending money right then. And it's not the best situation to be living in if you don't have a bunch of savings or a bunch of assets under your control that could potentially be moving up in value. Now, the interesting thing about what just happened with this inflation report is that stocks moved down, and gold didn't even make the biggest move, right? It actually moved up initially. Now it's back down again, lower than where it was when this, well, not quite lower than where it was when this report came out, but pretty low compared to where it was trading just earlier in the pre-market. And what actually moved up was the dollar. Look at this, the dollar chart right here. The dollar spiked up, and that is the exact opposite of what you would tend to expect if you're seeing more inflation, right? Why would people want more dollars when there's more inflation going on? And taking a look at this is the value of the dollar over time. It's strange to see people flooding into the dollar in this high inflation environment. I mean, this is the value of the dollar over time since 1935, I believe. And we can zoom in on the past 1 to 200 years, and we'll see that there has not been a meaningful increase in the value of the dollar since the 1920s. So maybe some people are making a bet that once every 100 years the dollar will increase in value. But that doesn't seem too likely to me, right? I don't think that the dollar is going to start skyrocketing in value, especially after we've printed so many of them. So it seems a little bit like a fool's play to me to start going all in on cash and selling stuff like stocks and gold, which it looks like people are doing. And even cryptos. We're going to take a look at cryptos. Those have been moving down also, and it is not looking good. I mean, this inflation report really spooked people. It was higher than expectations, and nobody liked that. But look at the price of Bitcoin. Bitcoin fell from $44,900 to $43,700, so more than $1,000 lost on the price of Bitcoin just now off of this inflation report in a matter of minutes. So a lot of people are fleeing Bitcoin, and that's strange to see because typically people think of Bitcoin and other cryptocurrencies as an inflation hedge. And back in 2021, when there were all these talks of inflation, Bitcoin and Ethereum and all kinds of cryptos were actually moving up and moving up big because people wanted to use them to hedge against inflation, or at least that was the narrative. And now it's strange to see that they're moving down and that people are actually selling on this inflation news. Now, a potential reason why this is because they might be worried that the Fed is going to see this inflation report and is going to become a little bit more hawkish, right? The Fed is going to look at this and see that inflation is rising and rising faster than expected and decide to do more rate hikes, decide to tighten monetary policy sooner rather than later and more harshly potentially than they otherwise might. And people are worried that because there's going to be less cash just constantly getting pumped into the system, that maybe these assets won't perform as well. But what they seem to be fleeing these assets for, once again, is cash right here. And cash does not seem to perform very well pretty much ever. At least for the last 100 years, it hasn't really performed very well at all. So it's strange to see that this chart on the right, the dollar, is actually moving up in value. It seems like the exact opposite of what you would want to be doing, right? You'd probably want to be buying up assets, maybe even gold and silver, less beneficial assets potentially over what we've seen historically, right? They might not move up as much as stocks or cryptos, but they might be a little bit safer. They might be a little bit of a better store of value. There might be some more people who are interested in holding those over the long term, right? They have a very large history of being held as valuable assets. So we'll see what happens if people eventually start moving in to gold or silver, which it seems like, maybe silver has had a little bit of a better time than gold lately, but neither one of them are doing incredibly well, right? Both gold and silver are not reacting too favorably to this news. They started off reacting somewhat favorably. After a couple of minutes after the news had released, they had started dropping, then they started moving up, and now they're back to where they were. So it's strange to see nobody wants gold or silver during these inflationary times, but that's just the world we're living in, right? People want cash for some reason, even though cash, at least in my opinion, doesn't seem like the best thing to be holding, but that's just what I think. Now, we didn't just have to talk about inflation, right? We have a couple of other things to talk about, and some other things have happened during 2021 and 2020. A lot of people were buying houses, and some of those people might be having some regrets, or at least that's what a recent study has found. It's a pretty interesting report, and after this, we will touch on the Meet Kevin Jeremy situation, even though Zach doesn't want it. We'll do it anyways. But this report here, 75% of people who bought a home during the pandemic have regrets, according to a report by Zillow. So Zillow has been doing a study, and they found that people have regrets about the houses that they've bought. Now, they don't necessarily have regrets because the price is going down, but some people do, right? We actually have it broken down for us right here, why people have regrets. So if we zoom in just a touch, we can get a better view of it. The main reason, actually, that people have regrets about the home that they bought is because there's too much maintenance. And that is completely understandable. For people who have never bought a house before or have never managed a property, I can tell you, as someone who is managing a property currently, it is either no work at all and it's easy going, or at times a ton of work can pop up and it can be torturous to deal with some of the situations that you've got to deal with. Sometimes some of the repairs can be incredibly expensive, and you never know when something is going to pop, when something's going to break, and you have to deal with a $1,000 repair or replacement of a part or some kind of equipment or whatever. It's really crazy stuff, how difficult home ownership is. So, I do not envy people who are living in their own homes, who just bought their own homes for the first time. That certainly seems like a big issue to deal with. I'm not owning a home, I'm just managing one. And it is a big deal, right? I almost look at some of my friends who are living in apartment complexes, and sure, you can say, hey, they're just throwing money away at rent month after month. They're building no equity in the apartments they're living in, but there certainly is a benefit, I will say, to having an apartment. And when something breaks, when something goes wrong, you can just put in a work order. You can call the repairman. They come over, they fix it. It's free. You don't have to do any work other than dialing the number on your phone or typing in the problem on your computer, and they will come and fix it for you. That is a massive benefit that a lot of people might not have realized was as important as it actually is now that they're owning their own homes, right? 40% of recent home buyers regret buying a home because there's too much maintenance, and only 24% are disappointed with home ownership because of value depreciation. So overall, people are still liking homes. And Zach Taylor says the worst part is we know these CPI numbers are manipulated as much as possible. Oh, they have certainly changed the way CPI is calculated, and it's scary to see that these are the numbers coming out higher than expectations because the government does not want these numbers to be very high, and I'm sure they're doing whatever they can to keep them low. But we're still seeing relatively high CPI numbers despite that not being in the government's best interest. So who knows what the numbers really are? I mean, I've noticed, I will say, over the past year, I have certainly noticed myself, just going shopping, just buying gas, and all kinds of other stuff, I've noticed more than 7.5% inflation in a whole lot of things. So, I'm not really sure, how they're getting this number, but the real inflation rate, at least for where I'm living and what I'm buying, is much higher than this. So, maybe someone wants to calculate that. I certainly don't want to deal with it, but maybe someone wants to calculate just how much their actual spending has actually increased over the course of the past year. Maybe some people want to do that and do a real study, but we'll see. We'll see if anyone actually does that. I'm sure there are people out there who are calculating the real inflation rate, and it's probably, in my opinion at least, a lot higher than 7.5%. So we'll see. But now we've got to get to this video right here, and we won't talk about it forever, I promise, but we will talk about it for a little bit. This is a video from Financial Education Jeremy, okay? Financial Education Jeremy published this video titled exactly the same thing as Meet Kevin's video, right? They both titled it Ending My Channel, period. Now, Meet Kevin's video has obviously gotten a lot more views because people probably realize that Financial Education Jeremy is doing a bit of a parody on his video, or at least talking about Meet Kevin. He's not actually considering ending his channel. And Meet Kevin, once again, has a lot more subscribers, so he's probably going to get some more views on his videos. But the point of this video was, and I watched the whole thing this morning, basically all that happened was Jeremy went over Kevin's video, he watched the thing, right? He talked about it, and they went through, and he basically just countered all of Kevin's points. Now, not all of Kevin's points, he countered some of them, right? And they were talking a lot about stocks being overvalued, right? Kevin was saying stocks are overvalued. Jeremy is on the opposite side. He's saying stocks are undervalued. I'm personally in the boat of thinking that a lot of stocks are probably undervalued, especially when looking at this, looking at the fact that more than a third of NASDAQ stocks, well, more than that at this point, right? This study came out January 14th, and stocks have fallen quite a bit since then. So at one point, stocks were probably, it was probably closer to 50% of stocks that had slumped 50% or more. It was probably quite a few more than this. We'll probably see some pretty big price appreciations in stocks, in my opinion, and in Jeremy's, right? He is on the bullish side of the camp. Kevin is on the bearish side of the camp. And Jeremy did, to an extent, tear Kevin a new one on this video. Now, he did say in the beginning that he doesn't have any hate for Kevin, that he was initially angry with Kevin when this whole thing happened, and that he was angry with him because he doesn't think that any good investor is trying to time the market, and he's blaming Kevin for trying to time the market. And to an extent, I think he's right. Kevin is trying to time the market. Now, it's interesting the excuse that Kevin comes up with, right? Kevin is saying, or has been saying in the past with his Psychology of Money course, don't focus on the number of shares you have, don't focus on the value of the shares you have, focus on the number. Just keep trying to get that number up. Keep trying to get more and more shares in your account. And then all of a sudden he flipped and he said, it's okay to try and time the market if you're doing it because of market cycles. Oh, Kevin, thank you for letting us know that we can time it if it's because of a market cycle. No other excuse except a market cycle. So it's kind of ridiculous to think, because the only real reason anyone would try and time the market is because they think that we're going into a bear market and a market cycle. So he's saying don't time the market unless you want to time the market because of a market cycle. It seems kind of ridiculous. And I think Jeremy is picking up on that a little bit. Now, I'm still a big fan of Kevin. He still provides amazing information. I love his channel and whatnot. But as of right now, I think he's not doing too great emotionally, maybe mentally. He's not in too prime of a position. I think that he's definitely suffered quite a bit over the past couple of weeks from all the hate that he got, which was initially spurred by him selling a lot of his stocks. Probably just out of fear, right? He probably just saw millions of dollars dissipating out of his account, and that's going to scare anybody when they see millions of dollars disappearing, evaporating into thin air. And he's probably suffered from that, as well as people deciding to hate him and turn on him for selling his stocks, which I'm not, right? I'm still a big fan of Kevin. Like I've said, I still think he's a great guy. I think he needs a little bit more support, probably a little bit less bashing Jeremy. I mean, I understand, Jeremy, you want to make a video about this, and maybe you could do it in a little bit of a nicer way. Jeremy really seemed to tear Kevin a new one, though he did say that he doesn't hate Kevin in this. So I think Kevin could use a little bit more support. Maybe Graham Stephan can come in and help him out. But overall, it looks like Meet Kevin is not completely ending his channel, right? He's going to continue posting videos because he has posted this video, Watch Before Morning, right after his ending his channel video. So the market live streams and whatnot from Kevin are done, but it looks like those are just moving into his course members only. So he will be watching them there. Now, we do have to talk about some really good news for one of our favorite stocks, CFVI, the Rumble stock, the Rumble SPAC. And if anyone is interested in checking us out on Rumble, I'll pull it up here. We have a different thumbnail, something more conducive to what Rumble might be interested in than YouTube. We've got the video streaming here as well. CPI inflation data, tank stocks, and that's what we're going to be talking about most of the time. But I will show you guys. CFVI stock. I'll probably pull it up right here before the market opens. All right, so CFVI, the Rumble SPAC. For those of you who don't know, Rumble is a video streaming platform and a free speech advocate, right? They are all about not censoring people, not canceling people. And recently, Joe Rogan has been, having a lot of censorship troubles at Spotify. A lot of people have been talking about that, and some people have been speculating he might decide to move over to Rumble. Now, we actually have got some news about that. He actually said that he was going to be sticking with Spotify to a Hollywood or to a reporter during one of his stand-up comedy specials. We're going to make a video about that and some things that Trump have said about Rogan. We'll make a video about that and cover that in depth in a video. But what's happened with CFVI as of late is they actually just put out this incredible tweet. And it looks like they are growing pretty rapidly. We already know they've had great numbers in January, and they have been moving up on that. And I'm teasing you guys, showing you this, but we'll see what they've done over the past 30 days just to show you guys. They've moved up massively on this Joe Rogan hype, as well as some great numbers from January. And it looks like those great numbers could be continuing because they tweeted this out. They said, pretty cool to take the #1 spot in the Google Play Store without even deep linking from our website yet. So Rumble, the app, which I've already got, I've had it for a bit, is the #1 app in the Google Play Store as of right now, at least for video players and editors. So pretty cool. A lot of people are obviously downloading Rumble. A lot of people might be moving over from YouTube. And I think that Rumble, which will pull up the main Rumble page, we'll just pull up the default Rumble page. You can see they've got it right here. Matt Kors is up there. We've even got one of our videos on the finance section right there. And it's a good platform, I think, right? They have very high quality HD video. I think that they could benefit, if you click on the finance section or any section really, from maybe adding the option or maybe making it a default option to have this in tile view instead of, or in a grid view instead of just being a list. I think that would be conducive to having a lot more of these videos actually show up on people's screens. So that could be a big benefit to them if they decide to do that. I think they would surely benefit, but we'll see what they end up doing, right? I think a lot of people are going to stick with Rumble, even if they don't have the best UI and user interface. Yes, they understand that they're a growing platform and that they're not having as much capital behind them as a company like Google has to develop YouTube. So they're probably understanding of that. Most people who are using Rumble are probably going to accept the fact that they are not quite as well positioned as YouTube software-wise right now. But I do expect that they will probably be growing that and improving that in the future. And it is my hope that they will do that sooner rather than later, because I think that could be a pretty big boon to them if they ever decide to start having a slightly better user interface. I think that wouldn't be too expensive. They could probably get some coders to come in for relatively cheap. I mean, they were willing to offer Rogan $100 million to just move his videos over to the platform. I think they could shell out, maybe $1 million to get some programmers to come in and really update the UI. That might not be a bad idea. Now, we did have some good news coming out this morning. Not great news, but not bad news for sure. The initial jobless claims for this week, right? This also came out. People were looking at this, wondering what would happen with initial jobless claims. We were forecast to have 230,000 new jobless claims this week, and we actually got 223,000 new jobless claims this week. So all in all, not the worst case scenario. It looks like new jobless claims have been moving down and down and down. So all in all, not the best news, but not the worst. It's not the biggest decrease under what we were expecting, but it was better than expected. So now what we're looking at is the dollar just continuing to climb, it looks like, as this goes on. Ever since the CPI data came out, people have been flocking to the dollar. And we'll pull back up the S&P. The S&P has been getting pushed down lower and lower. So now at this point, how far we're down from when the CPI data came out, we are now down 1.25%. So people are continuing to sell off these stocks, and it is having an impact on stocks like Sundial. Sundial moved down on this news as soon as the CPI data came out. It's not going to be good for growth stocks. And we'll pull up the Russells. We will see what the Russells has got for us. Hopefully something good, but it doesn't look too good. It's looking like we are moving down on the Russells. So when the CPI data came out for that, yeah, who'd have guessed? The smaller market cap, the growth stocks, the mid-cap stocks, they're down 1.87% compared to what the S&P was down 1.25%. So it's not looking great. We are losing a bit more on these smaller market cap stocks than the large ones. So that's unfortunate to see, but what else can you expect? That's the name of the game. And Kitchener Leslie says, I should design Rumble since I know everything. Yeah, I could definitely point him in the right direction, but I don't want to be responsible for coding it. And Corn-Fed Country says, what the heck did Joe Rogan say to piss off everyone? Well, we can't play the video here, but there is a video that someone made. There's a couple of things. One, the first thing that he did to bother people, and this is the whole Joe Rogan controversy, which you guys have probably heard of with Spotify. And Spotify stock actually moved up when Joe Rogan said that he wasn't going to be leaving Spotify. They actually had, I think it might have been, it was Monday or Tuesday, maybe it was Wednesday even, that it moved up. I think it was Wednesday, actually. Spotify did move up on the news that Joe Rogan was not leaving Spotify, and CFVI moved down. If you look at the chart for those days, you can see that CFVI had a bearish day on Wednesday, just yesterday, and Spotify actually moved up when it was determined that Joe Rogan wouldn't be leaving Spotify, or at least that's what he said to a reporter. Now, what he said to piss everybody off, well, it was a couple of things that happened. So the first thing that happened was he had on some doctors on his podcast who said things that people didn't like about vaccines and about the pandemic. And then the second thing that happened was not anything new, but someone made a compilation of his old podcasts from years ago where he was saying the N-word, and people did not like that one bit, right? People were actually pretty pissed about that and really wanted Spotify to cancel him. They ended up deciding to keep him on. They don't want to censor him too much, but they did remove some of his episodes. So there is some form of censorship going on Spotify, and that's why a lot of people were speculating that he may decide to move over to Rumble, and why CFVI stock, the SPAC taking Rumble public, ended up moving up in a big way. So Joe Rogan has, he's kind of quenched that rumor. He decided not to do it. It's moving down now. We'll see how low it goes. Probably not down to as low as it was before. Now a bunch of new people are at least aware of Rumble, aware of CFVI, and have bought the stock before, as well as a lot of new people have downloaded it on Google Play. So a ton of new people looking at this stock, and ton of new people potentially on the platform. So we're going to see what happens with it in the future. I'm hoping that they continue to grow, right? We are on Rumble ourselves, and I think that it is a pretty good platform to be on. If anyone wants, if anyone is making YouTube videos, I can't see a reason why not to post to Rumble as well. I think that that would at least improve the environment and the ecosystem of videos that they've got going on there. So I'm overall pretty darn bullish on Rumble stock. They have been growing massively, and I think they can continue to do so in the future. So we'll pull back up the SPY. And then, once again, guys, in a later video today, we are going to be talking about what Trump was saying about Rogan. So I don't have the quote right here, but we can pull it up. We can pull it up. He said some things. Here we go. So I think we've got the quote right here. Trump tells Rogan, he says, Joe Rogan is an interesting and popular guy, but he's got to stop apologizing to the fake news and radical left maniacs and lunatics, Trump said in a news release. How many ways can you say you're sorry? Joe, just go about what you do so well and don't let them make you look weak and frightened. Trump added, that's not you and it never will be. So that's what Trump has to say about Rogan. It looks like Trump doesn't like the fact that Joe is apologizing, and Joe has released a couple of videos where he's talking about how he's sorry for, saying all that stuff, and how he's going to try to have more doctors with opposing views on the podcast and whatnot. So we're gonna. Then Kitchen Leslie says, do a Trump impression. I'll consider it. I'll try to figure out how to do one. I've done one in the past. It's not too good, but I'll definitely do one in the future. Yeah, a lot of people in the comments do not seem to like the idea of Rogan apologizing to anybody for anything. And, whether or not someone wants to apologize for something is up to them, I think. I think that Joe can make his own decision about that. I'm not going to bash him for apologizing. If he wants to keep as many people happy as possible, then maybe he can apologize. But I don't think he should be forced, right? If Spotify's the one telling him to do this, I don't think he should have to. And I don't think that's the case, probably. I think that Joe is probably trying to be a nice guy. He's doing it on his own. And some things, taken out of context, certainly looked really offensive and might have been real cause for people to be upset about. So it makes sense that he wants to apologize and let people know that that's not what he's all about. Now, it looks like we are about to have the opening bell in just a couple of minutes. The S&P has flattened, so we're not actually moving down on the S&P right now. We're just waiting the next couple of minutes to see what happens when real volume kicks in, because it would not surprise me to see this thing go either way, right? This thing, it could continue to tank, or we could actually get a nice rebound if people start to maybe put two and two together and realize that the dollar might not be the best place to store their wealth and to store their value, because the dollar has been on the downtrend for the past couple hundred years. And unless people are expecting, a once in 100-year increase in the dollar, then I don't know why people would be flocking to cash. Now, I will say it makes sense to have some cash, right? It always makes sense to have some. That is what we mainly transact with. We're not using cryptos yet. We're not able to buy food with shares of Apple or Microsoft or anything like that. We are transacting in dollars, and sometimes stocks do get cheaper. Sometimes assets like gold and silver and cryptos get cheaper. So it does make sense to have some cash, right? I think you should hedge your bets against any potential situation. You should always have a well-diversified portfolio, and that does mean having some cash. Now, how much cash you want to have, if you want to be all in cash like Meet Kevin is, that does not make too much sense to me. I think that is far too concentrated play. I think that he's putting way too much potential all in the dollar. I don't think that the dollar has that much potential to really pump up in value. I think that historically, you've seen the dollar lose 99% of its value over time. We've lost the vast majority of the dollar's value, way more maybe than 99%. Just every year it decreases and decreases and decreases, and it's a big bet to make that the dollar is all of a sudden going to be a hugely beneficial asset to be holding, right? I don't think that that's going to be the case. Maybe I'll be proven wrong. Maybe history will prove me wrong, and this will be the year when the dollar really increases in value. But looking at the inflation charts, it's not looking like the dollar is increasing in value. It's looking like the dollar is actually being tanked, right? The dollar is decreasing in value massively, and month over month, it's decreasing in value in a big way. So I wouldn't expect to see a huge rally in the dollar anytime soon. I wouldn't expect to see that. I would expect to see the dollar moving down, and it should potentially be moving down a lot faster than it is. I would rather see stock prices move up because people are fleeing the dollar and buying up assets like stocks and gold and cryptos than the dollar moving up where stock prices are moving down. And that's the exact opposite of what I want is what we're seeing. The dollar's actually moving up for no apparent reason, right? It does not make too much sense, at least to me. Maybe someone can explain why, when there's massive inflation, people decide, let's hold some cash, right? Let's hold some cash and sell our assets. Maybe someone can explain that. But to me, at least, it doesn't make too much sense. And that just goes to show that's why you want to have a well-diversified portfolio, because you don't know what's going to happen. You can't know what's going to happen. Even when what you expect to happen happens, it doesn't mean that you're going to get the reactions you expect off of that. So just because we're seeing more inflation doesn't mean that the dollar is actually moving down in value. People are actually wanting to hold more dollars when there's more inflation. So that's why it always matters that you have a diversified portfolio. At least in my opinion, I think it makes sense to hedge your bets against any potential situation and not to go all in on one thing, because you never know what's going to happen in the stock market. And, people like to go all in on certain stocks. That's pretty darn risky in my opinion. I think that you should probably be hedging your bets in other ways and have a well-diversified portfolio, have a bunch of holdings in a bunch of different companies. And if you want to allocate a largest percentage of your portfolio to a certain stock, then so be it. I typically try to keep any one stock below 10 to 15% of my overall portfolio, just because I don't want to have the risk of something going wrong with that specific company. And I try to do the same with the dollar. I try not to have more than maybe 20% cash at any given time. I give it a little bit more leeway because, I have a bank account and I need to buy stuff with it. It's not all part of an investment. Some of it is just an emergency fund for whatever could go wrong. And Austin Libby asks an interesting question. Rob, what was the cause of the MJ sector's boost yesterday? Sundial wasn't alone. So it wasn't actually just the cannabis stocks moving up. We'll take a peek at some of them. So we'll keep SPY up here, and we'll also pull up Sundial. We'll pull up Tilray, and then we'll pull up instead of SPY IWM. So going back to yesterday, a lot of stocks were actually moving up, right? It wasn't just stocks like Sundial and Tilray. If we pull up the 5-day charts, a lot of these more growth-oriented stocks moved up massively. And one of the reasons I think that the cannabis stocks moved up in particular is because they have just been beaten down so hard. People have been shorting these to oblivion. People have been selling them and just paper handing them left and right. And I don't think there's any particular reason why that specific day they started to move up, other than the overall market started to recover. People started moving back into growth. They realized that there are large growth opportunities in cannabis stocks, as well as Sundial potentially leading the charge, getting its extension. Some people might have decided to add some, not just Sundial to their portfolio, but also other cannabis stocks. Because you can see Sundial did lead the charge, right? Sundial moved up the evening of Tuesday evening, they started moving up. And it wasn't really until the pre-market of Wednesday that Tilray and other cannabis stocks started moving up big. But I will say that there are a bunch of legalization catalysts that we've got going for us, and people are starting to look at legalization in a much more serious way, I think. And they're going to be looking at it much more seriously than they currently are in just a couple of months from now, when we really start to get prominent Democrats proposing these legalization bills, like Chuck Schumer, leader of the Senate. He is going to be proposing a cannabis legalization bill before the midterms, and I've already talked about this, to a decent extent in my Sundial video yesterday. But I do think that we're probably going to see a big push for legalization, looking towards the middle to end of this year, right before the midterm elections, because I think, well, I don't think I know. I'll show you this poll. We've got a poll showing. Here we go. We've got a poll showing that Americans overwhelmingly say cannabis should be legal, both for recreational and medical use, right? You can actually see this chart right here, which we've looked at. I'm sure you guys are tired of seeing this, but fewer than 10% of adults say cannabis should not be legal at all. So that means 90% of people are in support of legalization in some form. And that is a massive percentage of voters that you could start rallying to your party, to your side, and that Republicans have realized might be the way to move, right? If 91% of people, which is the number of people who support either full legalization or only medical legalization, 91% of people think that cannabis should be legal to some extent. Republicans have caught on to that. And Nancy Mace has introduced a bill for legalization, a Republican, and Amazon has actually endorsed that bill. Chuck Schumer's looking at a bill in April, or working on a bill that he's planning to release in April. And I think that these cannabis stocks are probably going to do pretty good. I mean, look at this. Sundial actually just completely recovered from the whole CPI debacle. It's actually moved straight up, and the markets overall have moved up a little bit, right? As soon as we got some real volume coming in, it looks like the Russell's is moving up, the S&P is moving up as well, but Sundial is actually down less than the market overall. So a lot of these stocks, a lot of these cannabis stocks have been performing well the past couple of days and could be doing quite a bit better in the future, right? This might just be when people are buying up some of their holdings and looking to increase their positions. And we can take a peek at the Ortex data at the short interest on Sundial. We'll see what they've got for us. Yeah, let's see what Sundial Growers has short interest-wise now. So, okay, it looks like as of yesterday, we decreased, and we are now at all-time lows for short interest since August. So look at this. Sundial, towards the end of the day, a bunch of shorts must have exited their positions on Sundial, and it's this green line overlaid with the price. The short interest just plummeted yesterday. So now we're down to 11.62% short interest regarding the free float and 238 million shares short. So shorts are exiting Sundial, it looks like, and that is actually the lowest we've been since August. If you look over here, got to get rid of that. Over here is the last time that we were actually lower short interest-wise than we are currently. So impressive stuff for Sundial. A lot of shorts getting out of that one, and probably for good reason, right? They probably have, made some profits. Surely they've made some profits. Sundial is still pretty darn low considering where they've been the past 90 days, the past year. And I bet the shorts were wishing that they covered, maybe 2 weeks ago when this thing was closer to 40 cents, when it was in the 40-cent range. They certainly had some time. But now it looks like, they see the way the tides are turning. Some shorts are getting out now. And we'll see how high this can go. Currently we're at 56 cents. My expectation is we'll be over a buck probably at some point in the next couple of months. That's the hope, at least, but we'll see. And Lester Ortega says, Rob, are you also doing live streams during closing? I'm not currently, but I would like to. So I might start doing the closing live streams. I might start doing them because it is, it's nice to cover some of what's going on in the morning. It's nice to cover some of the news that we've got in the morning, but by the end of the day, you really get much more of a full picture of what happened in the stock market. And sometimes there are developments during the course of the day that we just end up missing in these morning live streams because they haven't happened yet. So maybe I'll be doing market closing live streams. We'll see. I will consider that. Right now I'm a student. I'm going to school, and the closing live streams aren't great with my schedule, but I'll consider doing them at least on some days. Right? Maybe we'll do one today. We'll have to see how that goes, but maybe we might consider a closing live stream. So yeah, if anyone's interested in showing up for a market closing live stream, feel free. We might do that today. Just keep an eye out for the notification if I end up sending it. And Albert Pike says, I would watch it mostly every day if you do. Well, I appreciate that. We might do it. We'll see. We have done live streams that aren't just the market open live streams in the past. Typically, it's when something interesting is going on, like if Powell's talking. We've done a live stream then. And we'll see. Maybe we'll do a live stream for the market close, because I have been talking about that for a bit. We've also got some stuff going on a different front that, well, I'm not quite ready to say what it is, but we will be probably revealing that on Monday. So Monday, if anyone is interested, make sure to tune in, because there will be an announcement. If I get everything I need to get done, then we'll have something cool to say on Monday. So, Rocky Mountain Gobblers would love to participate in a closing market live stream. Yeah, I mean, people have been saying that they want the closing live stream for a while. Silver's been a big advocate for that. We might do it. Now, one stock that I like that's actually moving up, I have to say, I just noticed this on the chart, is MindMed, MNMD. Now, this thing got as low as 79 cents during this massive sell-off of basically all the small market cap stocks. And for those of you who don't know what MindMed is, it is actually a company that experiments with psychedelic medicines and psychedelic experiential therapies. And Kevin O'Leary has been a big investor in this. Kevin O'Leary, it's the same guy from Shark Tank, Mr. Wonderful. You guys probably will recognize him if you don't know the name. I'll pull up a little picture of him so you guys can see who this guy is. Oh yeah, you guys are going to like this one. right here from Shark Tank. It's this guy. You guys probably recognize him. He's a big investor in MindMed, at least last I checked. And he's very bullish on them because he wants to get into the psychedelic medicine space. And he recognizes that MindMed has more studies going on and more trials than any other psychedelic company. So it's a pretty cool area to be invested in. I do hold some shares. I hold some options contracts on those shares, and I've also sold some put contracts on them. So I'm pretty bullish on them looking forward. I think that they've got a long ways to go up. I think that a lot of these growth stocks have just been getting dunked on over the past couple of months, and that we are in for a big rebound, hopefully during the course of 2022. Hopefully this is the beginning of such a rebound. I mean, if anything was looking like a big rebound in these stocks, it would be them moving straight down for months and then moving up. Granted, we've had the same thing happen in November. We got faked out in November, and then we moved down a lot lower. Now, the question is, can the same thing happen again? Are we actually going to see these stocks move up for a couple of weeks and then just start getting tanked on? And the real question is, how low can they actually go? I mean, can this one go below 79 cents? Can we see Sundial go down below 40 cents? Maybe. I don't think that we will. I think that we've probably hit bottom on these stocks for a while, barring any catastrophe from happening, right? There's still the whole Russia situation, which we can actually, I think there's a little story about the Russia situation going on right now, which we can pull up. For those of you who don't know, Russia has a bunch of troops on the border of Ukraine, and there's been a whole debacle with the United States that a lot of people are worried about. Russia, it looks like, is going to be, working with China to some extent, that they'll be supporting each other if there is any conflict. And we'll pull out this story right here. Oh, shoot, we deleted it. Hold on. I'll pull it back up again. We'll pull up this story right here on what Russia has been doing lately. For those of you who have been watching the stream for a while, you guys already know. But Russia set to begin massive military drills with Belarus. And U.S. slams the escalatory action. So I haven't actually read this story, but to catch you guys up on what's been going on with Russia, they have a bunch of troops on the border of Ukraine. They don't want Ukraine to join NATO. The United States has deployed some troops in Eastern Europe, as has Germany. And people are actually upset that Germany isn't supposedly doing enough. So we'll see what happens. We've got, I think, jets have been moved over. Warships have been moved over to the Ukraine area. And it looks like all the major players are amassing their pieces on the borders of Ukraine. And people living in Ukraine must not be having a good time, because I cannot imagine, anyone watching the stream, probably you're in the United States, it would be tough to imagine living in a country and having troops from all these different countries amassing on your borders, amassing in your country's territory, and having to actually live through that day to day, worrying about an invasion. I mean, that's the kind of stuff you think about when you hear about World War II and living in Europe. And the United States is very fortunate to be in the geographic location that it is, with oceans on both sides of us, and countries that are relatively peaceful towards us, Canada and Mexico to our north and south. We're very lucky that we never really have to worry about troops amassing on our borders and huge conflicts like this being too close to home, like you might if you lived in Ukraine, especially if you don't have the most powerful military like Ukraine, unfortunately, doesn't. And what's funny and is actually relevant to the stock market and cryptos is that people were giving donations to Ukraine, and they were doing it through crypto. They were using Bitcoin to donate to Ukraine, and they were able to use that money. The volunteer organizations and whatnot, the non-government organizations, were able to use that money to help support the military, get some more military equipment, and it was a cool story about Bitcoin, and that also tied into this whole Russia situation. But now Russia is massing troops on the border, even more so, and doing these military drills, it looks like. So the worry that we have about what could be going on is the last thing that we want is a big escalation and a big war with Russia, because that would be absolutely devastating for the stock market. I mean, talk about peak fear. Look at what happened when people were worried that Powell might be raising rates and that we might not have as much dovish monetary policy from the Fed. We tanked about, 12.5%, I think, from the highs to the lows. We were down about, 12.13%. And that was on pretty much nothing, right? There was nothing really to worry too much about. People were worried a bit about inflation, but more so they were worried about the Fed's rate hikes. And the Fed's rate hikes have not been enacted yet, and they have not. Then they're probably not going to be too severe. I mean, maybe they will be if the Fed really decides to destroy the stock market. I don't think Powell will do it. I think that they're going to be pretty lenient with those rate hikes. We'll see, though. But something that really could move the markets down is this whole Russia-Ukraine situation. It could be a horrible situation for the stock market if we end up going to war with Russia and potentially China if they end up supporting Russia, because those countries both have nuclear weapons, so does the United States. There would be massive fear going on. Now, if you have cash at the time, that would be a golden buying opportunity, because you're either going to be living in a nuclear winter or we're eventually going to get out of the situation, and you'll have a lot more shares of stock that were very low in value when you bought them that would probably be heading much higher as long as those companies weren't destroyed during the war. Once again, though, the war seems like an unlikely situation. I don't think anyone actually wants a hot war between these countries that are incredibly powerful and have a bunch of nuclear weapons. I don't think anyone wants that. I think this is all probably just posturing by both Russia and the United States. Basically, Russia doesn't want NATO to accept the Ukraine into it, and the United States, I guess, wants Ukraine to be part of NATO, but I don't know if they were really pushing for that too strongly right before that happened. So we'll see what goes on with this situation. Hopefully, though, there won't be any kind of escalation of the conflict past just posturing. And these military drills are probably, once again, just a little bit more of the same, just a little bit more fear that Russia is trying to put on us, and a little bit more worry. But I don't think that anything will really come of it. But it is an important and interesting story to cover, I think, because it really does have the impact. If anything does, it has the impact to really crash the stock market. Now, look at this weird wick. Every now and then, these trading softwares like Thinkorswim have these weird wicks, and I can't tell if they're real or if they're just a glitch, but sometimes they really do mess up the chart, and they make everything look kind of cruddy. One time, just a couple of weeks ago, on the yearly chart, I think wick over here, one of these days where we were moving down, it ended up moving down so much. It just had the wick like way down here, and it just compressed the chart so much that it was hardly even lookable at, right? I could hardly even look at the chart with how weird the chart looked when it was compressed from having a one little wick move down to an incredibly low level. So I do tend to remove these bars just to get them out of the way. And see, we have a couple of bars removed, so we'll remove this one too. And just get it out of the way, because it does add a kind of weird look to the chart, I think, and I'm pretty sure that they're actually just little glitches. And Zach Taylor says, markets start pricing in rate cuts as hot CPI confirms Fed policy error imminent. Yeah, I mean, after this inflation report, we probably will be seeing some rate hikes. I mean, some people were saying, no, we won't see any rate hikes. Some people were saying we'll probably only see 2 the course of this year. Big banks like Goldman Sachs were expecting that we would see 5 over the course of the year. And, nobody knows what the Fed is going to do. In fact, the Fed has said that even they don't know what they're going to do, right? Or at least that they're not going to reveal what they're going to do. They say that they're going to see what's happening as the situation evolves, and they're then going to decide what to do about the rate hikes. So hopefully it's nothing catastrophic. Hopefully they don't decide to raise rates by more than a couple percent. My expectation is that we'll probably have, less than a 2% interest rate by the end of the year. I can't imagine them raising it more than that. Really, that's worst case scenario. I think it gets close to 2%. I really couldn't see it being too much higher than maybe 1.5, 1.25 by the end of this year. But we'll see. If inflation continues to really ramp up, then Powell's going to have 2 choices. And I've talked about this in the past. Powell really has 2 options right now. And looking back at what he's done in the past, one option is a bit more appealing than the other. So basically what happened, I'll pull up a picture of Powell. Basically what's happened with Powell is he has done a lot to save the stock market, right? When people were worried about inflation, not about inflation, but about the pandemic, you can see that stocks moved down dramatically. We had a massive crash, and we've had a big rally since. But the reason that stocks didn't move down more is because of Powell and because of all the money printing that he did. And he really did, if you look at it, save the market, right? When he enacted all of those policies, and granted the government enacted the CARES Act, we did see a big rebound in the stock market. A lot of people didn't even believe that we were going to stay at these levels. They thought that we were going to keep moving down lower. but the stimulus that was granted both by the Fed and the government was so great that it just pumped up the market to incredible highs, the likes of which we'd never seen before. And now we're dealing with the aftermath of that. So what's also happened because of all of that stimulus is we're getting some inflation. And it seems like inflation just keeps creeping higher and higher because of all that stimulus, despite it happening quite a while ago. We're now looking at a situation where Powell is giving us two things. He's giving us a soaring stock market, and he's giving us massive inflation. So Powell now has a choice when he has to deal with these issues. He can either help out with the inflation situation. He can move the stock market down in the process a bit. He can maybe tank it if he really deals with the inflation situation with big rate hikes, but that would have a very bearish effect on the stock market. Now, think about what's happened so far. All he's succeeded in doing thus far is soaring the stock market and soaring inflation. So what does he want to be remembered for? Does he want to be remembered for soaring the stock market and then crashing it to deal with the other problem that he caused? Or might he be more willing to let inflation persist a little bit? Maybe there's higher than desired inflation for a year, 2 years, 3 years. He deals with it to a minor extent. Maybe he does some rate hikes to deal with people's expectations about inflation, to make people think that there will be less inflation than is expected, and then psychologically that can actually have a real impact on inflation if people decide to save more, spend less, and all that. Maybe he can do that. But I don't think that he wants to move the stock market down in a big way. I don't think he wants to crash the stock market to save the dollar. I think that he realizes that he would then be remembered as the guy who made big inflation and crashed the stock market, because then he would have accomplished nothing. If he ends up destroying all that he's built in this market that's been perpetually expanding and moving up and up and up over the past just about 2 years, then what's he really done if he destroys that? I think that he's kind of in a tough place because he doesn't want to destroy the dollar. He doesn't want to create massive inflation, but that's a situation that he's already kind of, done what he can to do, right? He's already printed all of this money. He's already given out so much stimulus, and we're probably going to see higher inflation from that. In fact, we already are seeing higher inflation from that, and more so than what the government's reporting, right? You guys have probably realized that you're paying quite a bit more than 7-5% more for some of this stuff. Gas, food is getting incredibly expensive. Housing prices have gotten expensive. If you want to buy into stocks, they're incredibly expensive. So a lot of inflation has not really been accounted for. The government's not really done a great job of accounting for it, because there have certainly been more than 7.5% increases in prices over the course of the year. But Powell has a choice to make. Does he want to move down the stock market to try to deal with inflation? Or does he want to let inflation persist and posture as if he's trying to stop inflation while keeping the market moving up? I think he'd much rather do that. And that's just my opinion. That's just what I'm thinking. Who's to say for sure what he's going to end up doing? Nobody actually knows except for him, and maybe even he doesn't know what he's going to do. He probably is looking at how the situation develops and reacting based off of it. So we're still waiting to see what Powell does. But as of right now, it looks like the markets are moving back up. SPY is only down 0.5% on the day, and we're looking at a fairly greenish market, considering what we could have been. I mean, Tilray is green at least. Some of the stocks that we're watching, some of the smaller cap growth stocks are green. The Russell's is actually down the least of all. It's recovered the best, which is exactly what we want to see, because these small market cap stocks are the ones that have been decimated in the past. And I think that those are the ones that have a real chance of coming back in a big, big way, because I know we've talked about this quite a bit. More than 1/3 of NASDAQ stocks have slumped 50% or more. You would not know that looking at a chart of the S&P. You would not have guessed that more than 1/3 of NASDAQ stocks have slumped 50% or more, when you're seeing that the S&P is only down, or was only down at its pits, at its depths, down about 12.5%. So you wouldn't have guessed that, and I would much rather be in the stocks that have been beaten down massively over the past year than stocks that are closer to their all-time highs. So that's just my opinion. I would rather buy into those much cheaper stocks and potentially have the opportunity to make some outsized gains in the future. Now, we can take a peek really briefly at the market map and see what we've got going on, because it is a fairly red day, all things considered, but the smaller market cap stocks are performing a bit better than the big ones, right? Amazon, Tesla, Google, Microsoft, Apple, they're not looking too hot. And neither is a lot of the market at this time. We'll see if we can rebound a little bit throughout the course of the day. It looks like we have been coming back in a fairly strong way. But some of the smaller market cap stocks, not teeny market caps, right? These are still big companies like JP Morgan, Bank of America, Wells Fargo. A lot of the oil companies like Exxon and Chevron, they are doing better, at least, than the massive trillion-dollar market cap stocks that we've got. So overall, the market's not looking too good, but considering that we got that big of an increase in inflation over expectations, it could have been a lot worse. And we are, it looks like, recovering in a semi-decent way. We're actually moving up pretty significantly as long as the market's been open and as long as people have been buying big, as long as big volume has been in here. We've been seeing movements to the upside. So I'm excited to see it. Looks like Sundial is seeing something similar. Tilray is actually green on the day, that cannabis stock right there. Tilray Brands is green on the day, getting back up above $7. Happy to see it. I am a Tilray stockholder, so Super Kalel says, can I claim 3K if I lost more than 10K last year on my taxes? I'm not sure. I am not I put my stuff into TurboTax, man. I'm not a tax advisor. I'm not sure about that. It might not be a bad idea to ask an accountant or CPA about that, though. And Sub-Zero says, Rob is a financial advisor. Rob is not. I am not a financial advisor. None of this is financial advice, just my opinion on this stuff. And if people appreciate it, then they appreciate it and they can do what they want with it. But I never recommend anyone does anything with their money. I always say you guys got to make your own decisions. And I do hope that one decision you might consider making is hitting the like button on the stream. We've got about 150 people in here, and we've got about 60 likes. So it would be very much appreciated if we could pump up the likes, maybe to 70, 75, 80 likes. We could see if we could do it. It would not take very many people making that split-second choice to just hit that like button real quick. Whether you're watching on YouTube or on Rumble, it would be very much appreciated one way or the other. So feel free to do it. Thank you very much. It looks like we've already gotten quite a few likes off of that, so thank you guys. It does really help out with the algorithm. I know anyone who's been watching Graham Stephan, all he talks about, the YouTube algorithm, it needs the likes, guys. Smash the like button and all that. Rich M has to run. Have a great day. Bye, Rich. We're about to head out ourselves in the next couple of minutes. We will take a brief look, though, before we do, at some of these cryptos, because cryptos are a space that I want to get a little bit more into. I'm thinking more and more about them, and I've been listening to some very interesting podcasts by Naval. I'm not sure if anyone has heard of Naval, but really, really interesting guy. He's been involved in a bunch of startups, and he has made some really good money decisions in the past. He is big on cryptos. He talks about them a lot. He's more so a productivity and lifestyle kind of speaker, but I do think that there is something to be said for the potential value that cryptos could have if we decide to move over to them as a means of storing value and transacting day to day. I think that they do have quite a bit of potential for that. I think that they're probably a better alternative to the dollar. At least they have the potential to be. If we continue developing the technology and if we work out some of the kinks and get some more accessibility to some additional people. Right now, the beauty of cash is that you can have it in a bank account and you can transact digitally with it, as well as you can hold physical cash in your hand and you can hand it out to people and nobody's tracking you. Nobody knows what you're doing with it. And if you don't have access to the technology, like a smartphone or whatever, or the internet's down or the power goes out, you can still transact in cash. And that's the beauty of it. So there are some downsides to cryptos, right? And will they ever be able to fully replace cash without having some kind of means of physically transacting in them? Who knows, right? Maybe not. But I think that that's an area we could work on, and that there is some big potential value in them, that there's some big potential value in decentralization. I think that that's massive. Decentralizing finance is going to be probably the way of the future, I would hope. I think that it could really help some people out and end a lot of the corruption that we've got going on in not just the financial system, but maybe the political system as well. If we can really decentralize this stuff, then there would be a lot less sway that big companies and whatnot can have on politicians. We'll see. We'll see what the future can bring, and I will be looking more into that, and hopefully I will be able to speak more about that in the future once I'm better educated on it. But that is what we've got for today's stream. So if you enjoyed, feel free, hit the like button, subscribe to the channel. That's what we've got for the day, and we will be back tomorrow at 9 sharp to cover anything that's happened in the market since now. And make sure to keep an eye out for a video regarding the Joe Rogan situation and Rumble. So we will be talking about some good stuff that's been going on for Rumble, as well as what's been going on with Joe Rogan and something Trump said about him. If you didn't happen to catch that, make sure to watch out for that video. So I'll see you guys in the next one. Have a great day. Bye, guys.